This is Roy H. Williams, founder of Roy H. Williams Marketing and co-founder, along with my wife Penny, of the nonprofit Wizard Academy. The Academy draws successful business owners and executives from around the world. You're listening to Monday Morning Radio, featuring interviews with unconventional men and women who are putting into practice the profitable lessons we teach at Wizard Academy. Monday Morning Radio is produced by Dean Rotbart, who co-hosts the popular Business Unconventional Radio News magazine.
It's Monday morning. I'm Dean Rotbart, reporting this week from Boulder, Colorado. It's an age-old problem for small but growing product companies. Your orders outgrow your ability to fund fresh production and meet buyer demand. While customers are clamoring for your inventory, they may take 30, 60, even 90 days or longer to pay you for it. Meanwhile, in order to create that fresh inventory, you have got to pay your suppliers up front. How do most small businesses cope, especially given that few conventional lenders will offer such inventory financing to small businesses? The answer is that most small businesses lose sales and often stall growth. Enter Sean Clercq, this week's guest on Monday Morning Radio. Sean and his company, Kickfurther, have solved the product inventory financing conundrum, and in doing so, created a crowdfunding-inspired marketplace that is revolutionizing inventory lending. Kickfurther brings together growing companies that need to finance their next production run with investors who buy an actual share of the company's inventory. When that inventory sells, the investor receives a return that trumps investing in the stock market, mutual funds, real estate, and the like. Moreover, investors are encouraged to roll up their sleeves and help market the product inventory they've invested in. To date, Kickfurther has funded the inventories of nearly 200 companies, raising well over $3.5 million in financing that otherwise may never have materialized. To become a Kickfurther inventory investor, you needn't be a sophisticated investor or even a tycoon. An initial commitment of just $20, that's right, $20 will get you in the game, and already more than 1,250 investors have climbed aboard the Kickfurther juggernaut. Even if you're not involved in product production and financing, Sean Clercq's tale about his effort to build an entirely unique business financing marketplace is one that is overflowing with entrepreneurial insights that everyone can profit from. So join me as I sit and chat with Sean in Kickfurther's basement workspace in the Boomtown Startup Accelerator. Sean, good to have you with us.
Great to be here. Happy to be on Monday Morning Radio.
So we're coming to you from Boulder, Colorado. This is, what's the name of this whole place called? Boomtown?
Boomtown Accelerator in Boulder.
And basically it puts together entrepreneurs like you and your team with some mentors. Is that correct?
Yeah, it's pretty much, they take a little bit of equity, they give you a tiny little bit of seed funding, and then they help you build the business for 3 months, and then they introduce you to mentors and investors, and hopefully, help your business get to the next level.
Let's tell our listeners the story of Kickfurther in the sense that, what do you consider to be the day, month, or year that you actually started the business?
It's a good question, and I actually remember it pretty distinctly because I woke up the next morning and I texted my family in our little family text, and I said, guys, I've come up with the idea that's going to make me famous, because I was so sure that it was formative and innovative, and the reason I came up with it is because I was running a merchandising company at the time, and with merchandising companies you have to originate, you sell a product, and then you have to pay for the product and ship it to your buyer, and then you have a payment term like net 30 or net 60. Right. So you ship the goods and then you have to wait 60 days to get paid. Meanwhile, you have to pay employees and you have to run your business, keep the lights on. So this financing piece of my merchandising business, the best financing I could find was from a factoring, accounts receivable factoring, and they would only offer me a 15% discount. It was extremely expensive. I was losing about half of my margin just to the cost of money on the front end before I could even actually sell the goods or start the production. So it was a hugely painful point for me when I was running my merchandising business, and at the same time I was earning almost nothing in my savings account. Literally having money in my savings account, I was losing value to inflation year over year in comparison to interest rates. So there was a massive opportunity in my mind between the trillions of dollars that are sitting in savings accounts and the businesses just like mine that needed financing but were getting fleeced by merchant cash advance services or accounts receivable factoring firms.
So when you send that email, what day was that?
It was a text message, and it was October probably 2013. October 2013.
And how quickly, between October 2013, did this begin to consume your waking hours?
It was pretty much almost immediately. I was taking a class at the time, which was business development. I immediately turned all of my resources in that class to building out a business model for this idea. And I worked for the next 6 to 8 months on that business model, kind of not sharing it too much, which was one of the biggest mistakes. Is working in stealth mode was like terrible for me.
Good lessons.
Yeah. But
so let's do that. Let's talk a little bit about, because I suspect among our listeners there are other people that have that epiphany. They say, I've got the idea. They send that text message. I know what I'm going to do. Who do you go to first? Who do you go outside of the people, if you go to anybody outside of your people in your family, who do you go to first? Who do you begin to talk to and say, I've got this idea. It's a great concept. I know it's going to work. Do you immediately start looking for investors?
No, for us what we did is first we validated the idea, so we looked for competitors and we did a little bit of research.
Who was we
first.
At this point?
Me. So
okay.
Right.
Okay.
Before we built a team, it was myself, the entrepreneur. I had an idea. The first thing I did was, does somebody else have this idea? Is somebody doing what I'm doing, but they're doing it well, and there's no need really for what I'm doing, right? So that was the first thing I did, was some market research. That turned out that it didn't look like anybody was doing what we were doing, so that seemed like a good opportunity. The next thing that I think, knowing now, what I did do is I did go to speak to friends and family. That's who I went to validate my idea. And looking back on it, I don't think that that's the best, because unfortunately with personal relationships, friends and family, it's personal. So people, even if they really think your idea is not the best idea, they tend to be a little bit more reticent to give you that advice. So nobody wants to tell you to give up on your dream. So for me, the best validation of my idea was when we got to the accelerator and we actually took the idea out to speak to potential customers. And we said, here's the idea, will you use it? And when we started getting feedback, yes and no's, from our potential users, that's when we knew that we were on something.
You talked about stealth mode. I think a lot of would-be entrepreneurs fear that if they have a neat idea and they tell people, someone with more resources, more experience, more connections is going to steal their idea. What's your sense about that now looking back? You kind of indicated you thought maybe you should have told more people about this. Was your reasoning for not telling more people trying to protect the idea?
Yeah, absolutely. So as an entrepreneur, first thing I did was market research, and I said, whoa, this is a big idea. I thought it was a big idea, and I looked and nobody was doing it. So I was afraid. That's what it is, right? Oh my God, it's a great idea, and if I tell people, somebody with connections, just like you're saying, connections or money or resources that can make it happen faster is going to steal my idea. And at the end of the day, today, looking back on that, I realized it's a big mistake, because anybody who's in that position to steal ideas, there's a million ideas, and those people are getting approached every day with pitch decks from companies that are interested in bringing them on as advisors or mentors or investors in their companies, and they go through thousands of companies. There's 10,000 companies coming out of accelerators every 6 months. There's so many ideas that, in fact, even with what we're doing at Kickfurther, I'm almost sure that there's 2 or 3 teams out there that maybe don't have as much traction as us, but are working on almost very similar, identical products. There's just too many opportunities now for entrepreneurs, and there's too much happening. Somebody else is working on it, and you have to win on execution.
There's a lot. I want to come back to that. Okay, let's make note of that, win on execution. But I want to make sure everybody understands what Kickfurther does. I want to make sure that I understand what Kickfurther does. Let me go to the limits of my ignorance. my ignorance is vast, Sean, so to try to reach the limits of my ignorance. But most people are familiar at this point with crowdfunding. And the laws of crowdfunding are changing in terms of whether you actually can invest and get equity in a company or not. But the great limitation has been that, in fact, without registering as a public company with the Securities and Exchange Commission, most of what happens in crowdfunding is you end up buying a product, or you end up buying a t-shirt, or you end up just making a donation, and you put together a pool of funds to help an entrepreneur. What you can't do, unless the laws have changed and I've missed it, is you can't, if you're a small investor, if you're not a sophisticated investor, you can't buy equity in a crowdfunded source. Is the law still right?
That is coming out right now. So Title III is coming out as we speak.
Right. Okay. But at the moment, that's sort of the way it is. Your concept was a way to help companies raise money, but maybe it's raise money or fund inventory, and you can explain that.
Sure.
And rather than having investors who invest in equity, they become a shareholder of the company. Mm-hmm. You find investors who will invest in the inventory of a company. Have I got it right so far?
Right.
Take the story from there. Explain what Kickfurther does and how it really does differ from crowdfunding.
Absolutely. So let's start with, what does Kickfurther do, and how are we different from these other investment vehicles? I think that's a good point. So the very basic premise of Kickfurther is, today, as an individual, you, me, Joe, your neighbor, whoever else, you can go to Alibaba or AliExpress, put $100 into inventory, have it shipped to Amazon, never see or touch the product ever, and then sell the product through Amazon and then you could put a margin on it, and now you're earning a profit on an investment. You're investing in inventory, putting it with a marketing channel, and then selling the inventory and earning a profit. That's the basic premise for how Kickfurther works. We put those elements together onto one platform. So you're buying inventory from a supplier, you're putting it with a logistics and marketing channel partner, which is our brands. They handle the fulfillment, and they also give you a channel that you can market, like Amazon would provide. And the additional benefit of Kickfurther is that every single user has their own Kickfurther store, so they can help sell the inventory and earn a commission for actually selling the inventory that they have invested in. So it's really a mini retail experience. It's almost like semi-active, and it's an investment in inventory. And the benefit is that these businesses, the brand partners, the channels, they get the inventory on a consignment contract. So if they sell through the inventory, they now get the inventory they need to grow, and they have a cohort, a community of people that are all invested in the growth of their company.
I think one of the challenges I have faced in my experience as an entrepreneur is needing clients, needing customers, if you will, but not always being able to get the quality clients and customers that I want. In some ways, is that not one of your challenges, which is that the companies that you line up for Kickfurther that have to have products that people can buy their inventory and resell their inventory have to have a certain quality, because if you're buying lousy inventory, it doesn't move, right?
Right, absolutely. And one of the main differentiators between us and rewards crowdfunding is we're specifically not for creative and new companies, because first production runs, for anybody that's been in supply chain management, they know that first production runs are rife with problems. The shipments come in the wrong thing, the mold size is wrong, packaging isn't right, whatever else. So we only fund businesses that have a track record of sales and are put after their first production run. And there is a level of qualification where definitely we have more investors than we have businesses. Our community is eager to fund great new companies, but for us, we've also been getting great traction because we have a pretty unique offering, and as word has been getting out, referral and word of mouth marketing has been really powerful for us.
What do you envision as you look down the road in terms of eventually the number of investors you'll have and the number of companies that you'll line up? Do you see this as being, we're going to be talking about thousands and thousands in your vision as to where you're headed?
I mean,
That would be nice, right?
It depends on it depends on how long you're talking about vision. My vision is, Peter Thiel says, if you're not creating a company that can serve 1 billion people, then you should be working on a bigger idea. And for me, I think Kickfurther, it's really about making these capital investment opportunities available to everyone. And that to me speaks to a global multinational. I'd like to have 1 billion users on Kickfurther, investors.
Let's take a couple of minutes, Sean, and talk about what type of individual or company is ideally suited for having its inventory be represented by Kickfurther, and what type of individual or company are ideally suited for being investors in that inventory. And maybe you can even give some specifics in terms of companies that are already affiliated with Kickfurther or investors.
Sure. So in terms of investors, we have our doors open to everyone. So on the user side, the investor side, we have people that range from those that are excited to be engaged with the highest levels of a business, because these are the CEOs, the presidents that are lining up these offers and interacting with their community, which are now their investors. So we have these little guys that are in it for the emotional connection, supporting growing brands. That's great. That's kind of the traditional crowdfunding crowd. Then we have bigger investors that are here to make income. Their interest is in funding good deals. They put in significant amounts of capital, and they expect good returns. They're here for the value investing.
Let's be specific, a little bit specific. What, by your definition, is a significant amount of capital? Go ahead. Significant
amount of capital to me are the users that come on and they'll put in the maximum amount, which tends to be anywhere from $1,000 to $10,000. Okay. If they like an offer, they put in the maximum they can possibly put in. They deploy as much capital as possible. And on the other end of that is we have users that the normal kind of like the retail investor users they make up the majority of the user base, and they put in anywhere between $20 to $50 to $200. And it seems like most people have picked, I want to deploy $200 a week, or I want to deploy $20 into each offer. Most people have developed their own system and they adhere to their system.
And I'm a little confused about it, so forgive me, Sean, but in essence, when I decide I'm going to invest, I am told what kind of return I can expect. Is that correct?
You're told what the profit is that the business is offering. It's the consignment profit.
It's the consignment profit. Now,
right.
That doesn't guarantee me that return, because if the inventory doesn't move, I don't get that consignment profit. Is that correct?
Exactly.
And the range right now, as Kickfurther exists today, of the consignment profit is from what percentage to what percentage? What's one of the higher percentages of a real Kickfurther company and one of the lower percentages?
The highest we've seen, we call it annualized. So if we do 10% in 6 months, we call that 20%
right.
Annualized. So the highest we've seen is 120% annualized. That was on Tuggo Dog Toys and Titan Tech. Those are the two offers in our complete section. And the lowest we see is around 15% annualized. So 10% in 8 months is about the lowest.
And there is an investor for all of that?
And the higher returns get funded in seconds. We've seen offers get snatched up in 30 seconds from our user base, and the lower returns, they take longer to fund. They're a little bit less certain, and if you don't get the community excited, that's where you can run into where you might not reach your funding goal.
Okay. And what I think we should do, Sean, is let's take a quick break. And when we come back, I'd like you to, if you can, you name dropped a couple of companies. I'd like you to maybe walk through some real examples that you've had so far in terms of the companies, the products, the inventory. Again, do you disclose who your investors are?
They get access to their backers through our platform, so they can communicate directly with their backers through a board that we provide, similar to the way Kickstarter works as a private backer board, essentially.
Okay. Good. So let's do that. We're going to come back. We are coming to you this week from Boulder, Colorado. I am here with Sean Clercq. He is the founder, CEO of Kickfurther. More information available at kickfurther.com. Exactly. We will be right back. You're listening to Monday Morning Radio. I'm your host, Dean Rotbart. Welcome back to Monday Morning Radio. I am your host, Dean Rotbart, coming to you this week from Boulder, Colorado. If you've never been to Boulder, Colorado, this is one of the more gorgeous places where it's nestled really in the foothills of the Rocky Mountains, and University of Colorado is based here, and it is absolutely a great student town. I'm here, by the way, with Sean Clercq. He is the founder of Kickfurther, kickfurther.com. It's a lot of good entrepreneurial energy in Boulder.
Yeah, there definitely is. It's a great little hub here.
How did you end up in Boulder?
I was in New Jersey before we started Kickfurther, and we applied to accelerator programs and really lucked out because we got into Boomtown here.
Okay, and what are they looking for? What is Boomtown looking for? Are they looking for companies that are just going to succeed? Is that the main qualification?
Yeah, most accelerator, we applied to a few, and I've spoken to a bunch of different owners of accelerator programs, and generally what I hear from a lot of them is that they invest in team. At this stage, most ideas are not validated. Most companies don't have revenue or real customers yet, and it's about having a team that's going to be engaged and have the attitude and the hustle to get it done, because with any business, no matter what you're doing, there's always problems, and it's about kind of having that fire to not let something die on the vine. And they really say they invest in people more than in ideas.
How long will they stay with you as an accelerator?
An accelerator program runs for 3 months, but once you're out, you're always part of the alumni network. It's almost like graduating from college.
Okay. Good. I want to continue. Before the break, we were talking, I wanted you to give me some specific examples of inventory companies that have shared their inventory, made their inventory available through Kickfurther. Before we do, though,
Sure.
Just hold off briefly on that. I want to go back a little bit to the earlier area. You started this on your own. You had the ideas. Where along the process did you end up picking up your first employee? Was it a literal employee, somebody that you actually said, I'm going to pay you a real salary? Was it more of a friend employee who was going to work for promises? I'm always interested in how a business develops. When did you start really going from it's just me, Sean Clercq, to I'm hiring people?
When we got into the Miller Lite Tap the Future pitch competition, up until that point, I had been working on the business pretty much entirely alone. For that pitch competition, I engaged the help of my sister, who very entrepreneurial, and she was great. And then once after that pitch competition, we got into an accelerator program, had an interview for that, and running a tech company without a technical co-founder is a impossible dream, pretty much. So one of their main requirements was that we find a technical co-founder. So I'd met Andrew on Reddit previous to that, and
Andrew Westwick,
our CTO.
Okay.
Yeah, and it was great. He was engaged with the idea. We split. He had an equity position. I didn't have any cash. I didn't have the resources to pay anyone other than selling my idea. So we got into Boomtown, the accelerator program, leveraged that credibility to bring on a CTO, and then, he was living in Austin, I was living in New Jersey. We literally moved in together without ever having met face to face, which is pretty crazy.
Wow, that is pretty amazing. At that point, when you first did, it was the Miller Lite pitch competition?
Right.
Did you have a website at that point?
Nope, no website.
No website. Did you have a LinkedIn page?
No website, no LinkedIn page, no Facebook page. We had some materials that were offline, like Excels and some graphics that we had designed, but it was very, very bare bones.
So from the time you and Andrew became roomies, then was one of the early priorities building a website, or not yet?
So it was actually pretty fascinating. So we started living together at the very beginning of September, maybe the very end of August 2014. The accelerator program ran from September through November. And for the first month, it was a 3-month long program. Pretty much for the entire first month, we didn't deploy any code. So we were out validating the idea, speaking to customers, seeing whether we actually had found the segment and the market and the idea that would be able to scale. Once we had validated the idea with real customers, then we started deploying code to build the product itself.
Who was your first real customer?
The first real customer we had, so that's a good question. The first customer we had was running a business. We did fund inventory. It helped grow her business, but it was through a personal connection of Andrew. It was one of Andrew's friends. One of the very first customer we had was through the Boulder network here that was completely unaffiliated with us other than just being a business owner that happened to be local. That was Thump Extremes.
So tell us a little bit now. Tell us about one or two of your more shining success stories so far in terms of companies that you have helped move their inventory.
Absolutely. So for us, it's about a big thing about what makes me passionate about what we're doing is we have a unique ability to serve businesses that have been essentially get the doors closed on them from other providers. So one of my favorite companies we worked with early was Nathan from North Coast Organics, and his offer, he had purchase orders from major retailers in the US, and he literally couldn't find financing because for a bank to go through the underwriting process and everything for a $1,500 or $3,000 purchase order makes no sense for a bank to even do the underwriting. So because his business was small, people wouldn't even talk to him. On Kickfurther, it's great because the business owners set up most of their offers. They do a lot of the work themselves, so that gives us the ability to work with much smaller businesses. So he had a great product. He had purchase orders. He came on. He got his inventory funded, did the production, shipped, got paid. Came on for a second offer. He did 4 offers in his first year, and each time he got a better rate, raised more inventory at a lower profit offer to the community. And I'm hoping that he'll line up his 5th offer soon. He's got his 4th offer closed out.
Very impressive. Does Kickfurther handle all of the payments and disbursements of cash? You're the central bank, so to speak?
We act as the intermediary, so we are the user interface between the businesses and their community. So the businesses issue their payment to us, we make sure it gets distributed accurately to their 100, 200, 300 backers, however much it is, according to what their original weight of their purchase was, right? So if a person has a $20 claim, they're going to get a smaller piece of a payback than a person that has a $2,000 claim.
Right now, I think I'd read something, but I don't want to be wrong. Right now, from the smallest to the largest investors, how many total investors does Kickfurther have?
We have 1,250 active investors right now around there.
And again, somebody listening, if they want to become an investor, maybe just sort of put their toe in the water so that they understand it a little bit more, they see it. One is there's no qualification. You're not going to say you have to be a sophisticated investor. You have to be anything like that, correct?
You have to be able to make your decisions about what inventory to buy. So before you buy anything, just say, would I buy that? That's like a best litmus test.
But they're betting on a real product from a real established company.
Exactly.
Right, and to sign up, do they sign up at Kickfurther if they want to be an investor?
Kickfurther.com, you can sign up with Facebook, and it takes as little as $20 to get started. And if you link your bank account, we give you a $10 credit, so it's $10 to get started.
So let's say I want to do that. I mean, literally, I want to do that. Okay. When I sign up, do I commit up front? Do I say, okay, here's $1,000 and I put it on deposit with you? I only do it when I'm ready to pull the trigger and say, this is the inventory I'm interested in backing?
Exactly. So essentially you get your sign up, link your bank account, you'll get a $10 credit. No need to put any money into Kickfurther at the time when you find an offer you like, and they get snatched up quickly. So you have to be there at 5 p.m. Eastern or 3 p.m. Mountain Time, 2 p.m. Pacific Time. That's when the offers go live and they move quickly. But you sign up when you find the offer you like. The credit gets applied automatically, and you can put it on a credit card, and it's billed like a purchase.
And the typical turnaround time is how many months?
It can be anywhere. We've seen anywhere from 2 months to 8 months to, I think our longest is actually a year, but that's typical, is 2 to 8.
Okay. And so that's kind of interesting, and it seems like there's probably a lot of room for growth in terms of people who would be interested in trying their hand at investing. And then the question is, are there enough companies right now today to invest in? And I suppose that if there's a supply-demand issue, that may be where there's a shortage of supply, that you need to have plenty of companies that have good inventory, essentially good receivables, but need some help in financing that inventory, correct?
Right, and actually what we found, our best performing companies are not companies actually that need help with financing. Okay. Almost all of our best brands have existing financing options. There's plenty of providers. There's Can Capital, there's On Deck, there's PayPal Working Capital, there's Cabbage, there's a lot of providers. either selling accounts receivable factoring or merchant cash advance services. So for us, it's not about businesses that need financing. It's about businesses that are looking for a better financing solution, and also businesses that are interested in building their brand by engaging their customers in really a very innovative new way, I think.
If I'm a business and I have inventory that I think would fit with the Kickfurther milieu, if you will, how do I decide, how do I price what I'm willing to pay as what is the word you use? It wasn't a commission, it was
consignment profit.
Consignment profit, that's the word. How do I decide what kind of consignment? I understand the stock market. I don't quite understand this market in terms of how the pricing gets set.
So one of the fascinating things for us is that we let the business owner set pricing. We've got a market of investors. We can offer guidance to the business owner and say, hey, if you don't offer at least 30% annualized, we don't know that you're going to get funded. But at the end of the day, it's the business owner controls the metrics on his offer. And if he wants to offer 1% profit to the community and say, hey, give me, I'd like to raise inventory, super safe, I'll pay you back 1% in 6 months. We don't tell business owners they're not allowed to do that. No. We don't say no, but the chance for success there is relatively lower. So we provide guidance.
Do you have a way that you're making money even if the inventory doesn't move?
We get funded. We earn a 3.5% success fee when the offer gets funded. So if a $10,000 offer gets funded, we earn $350.
Yeah, very, very interesting. Tell me another, Sean, if you will. Tell me one more success story. You talked about Nathan. Give me another success story. And then let me know, even if you don't want to name the name, if there was something that didn't work. I think people might like to know, where either you had to learn because you did something and it didn't work, or the business owner has to learn because they tried something and it didn't work.
Sure. So I'll give you an example. Another success story that has been great was Stojo. So Stojo was in a position, again, they had inventory financing options. They could have gone to merchant cash advance. Most of the companies and most of the providers that were in their position, they demanded a personal guarantee. So great, we'll give you the money for your inventory, but we want you to sign personally on it. They didn't like that. They found Kickfurther, loved Kickfurther. They launched an offer, raised $24,000 in under 48 hours on their first offer ever. I think it was I think they offered 12% in 8 months, so they were living in that 18% range, I believe. And they closed it out early. They brought the inventory in, they sold the inventory, they needed to buy more inventory, and so they came back to us. So they paid back their offer early, which is something that we see pretty often because we only allow one offer per business. They paid off their offer early, cleared their obligation, lined up a second offer, and just last Friday, they funded $65,000 in 1 minute on their second offer. It took them 1 minute to raise that.
Very impressive. Very impressive.
Great to see. And then in terms of a business that didn't do as well, we've seen the number one thing that sticks out to me is we launched an offer on our platform that was a very high level professional product. So it wasn't backed by a purchase order. Sales were done pretty much through the business's website. It was a very high-end product, like a $1,500 to $1,700 product for something, and the functionality was essentially a very good quality sound recorder as far as I could understand. And for most of our users, they look at something like that and they say, would I buy a $1,700 thing that offers the same functionality as my iPhone? And they sell to mixing studios and essentially like
so you tried it though. Level. You let them try it.
We launched it. They raised about half of the money they needed, but they didn't get funded, and it was just it wasn't a good experience.
So, and if they don't reach the funding threshold,
right?
Basically, everybody who attempted to invest in it just gets their 100% back.
If you put it on a credit card, you never get billed.
Okay.
So we never bill the cards until the funding goal is reached. And if it's account funds, then we just kick it straight back and there's no fee.
I do suspect that there are going to be people listening to this who think of themselves as being good candidates to have inventory listed on Kickfurther. Anybody can go to your website and sign up to be an investor. Is the process of offering inventory, what do you call it, being a provider? What's your terminology for a company that's offering inventory?
A brand partner, channel partner.
A channel partner. If I want to be a channel partner, what do I do?
So you come to kickfurther.com. In the top header, there's a tab. It says list your business. You click on to list your business, and then we have a pretty solid workflow where you can provide some basic information. One of our guys will contact you, we'll do a qualification process, and then we can launch companies in as little as 48 hours. We have a
And if they list their business but they don't qualify, is there some benefit of still listing their business with you?
If you list your business, you never will actually get listed until we have qualified you.
So you have it basically is raising your hand and saying, I want to be considered.
Exactly.
And if you do, and it can happen pretty quickly.
Right.
If you can do it. Okay.
And the more info you provide in the listing your business, the more quickly the process will go. If we can evaluate and consider multiple data points, then the qualification process can be done much more quickly.
We're going to let you go. I just want to conclude with one other loose end here. We know you hired Andrew. That was your first real partner employee. But just in walking around here, I have a sense you've got new people coming on now. Right. So what's your current employment level, and who are you hiring these days?
So we're at 10 people today. On Monday we'll be at 12. So the team is growing.
Okay.
Right.
And what are you primarily hiring these days? Are you primarily hiring salespeople?
We're primarily hiring salespeople to build out our sales and marketing pipeline and really optimize on that. But we're seeking a round of fundraising in the next 3 months, and after that we'll be looking to bring on more C-level employees, including a CFO and a COO.
That I think is pretty exciting, Sean. I think what you're doing is fascinating. I like the idea that you have the vision of eventually impacting 1 billion people. I think that is terrific. Thanks for taking the time to be with us on Monday Morning Radio.
Thanks so much, Dean.
That wraps it up for this week's edition of Monday Morning Radio. Until next week, I'm your host, Dean Rotbart. Have a great week.
You've been listening to Monday Morning Radio with Dean Rotbart. Be sure to read and subscribe to my weekly email column, The Monday Morning Memo, at mondaymorningmemo.com, where I share my observations on the world at large. Trends, tastes, marketing, advertising, small business, whatever else is on my mind. This is Roy H. Williams.
Good luck, all the best, till we hear from you again.